Hello, welcome to Master Your Credit. I'm Mark Foster. I'm the Director of Education with nonprofit CCOA, Credit Counseling of Arkansas. Why don't we go ahead and dive right in to taking a look at what things go into credit and how you can optimize your credit. CCOA is a nonprofit that's been helping people for 26 years now with personal finances, credit, debt issues, and more. We're headquartered in Fayetteville. We also have offices in Bentonville and in Fort Smith, but we also help people by phone and online. So those options are available to people all across the state and out of state as well. If you'd like to learn more about us, go to our website at ccoacares.com. And there's our phone numbers on the screen if you would like to contact us for more information or to make an appointment. And also make an appointment through our website. All right, have a little fun test of your credit knowledge. But don't worry, it's not too bad. And this is it, just 5 questions, so it's not too overwhelming, but it is a fun little game to play. Number 1 is most negative credit information will affect your credit and can be a part of your credit record for how long? Is it 1 year, 5 years, 7 to 10 years, or forever? And the answer is 7 to 10 years information can be on there depending upon bankruptcies and some specifics of different things. But generally it's 7 years, 7 to 10. In some instances, it might feel like forever, but it's typically in the 7 to 10 year range. True or false, number 2, someone can be denied employment because of having bad credit. This might seem like discrimination, but the law allows employers to look at credit factor. They have to ask, they can't just automatically do it. But my mother, for example, applied to work at a bank once years ago. And as part of the job process, they asked for permission to pull a copy of her credit report. And she gave that, or otherwise the potential employer can say, well, thanks for coming in today, goodbye. So they can do that in roughly 48% of the cases, employers do, particularly if there's going to be dealing with finances or the government and military may have secret positions, sensitive positions where they want people who are financially stable working in those areas. So we can be denied employment because of bad credit. True or false, number 3, if you owe money to your creditors and you can't pay the minimum amount due, as long as you pay something each month on your bills, your creditors can't do anything about it. This is actually a big credit myth that we often hear, where people will say, well, if I just pay $10 a month on that bill, I'm okay, they can't do anything about it. Actually, they can sue you, wage garnish you. Yeah, it's not a pleasant process. So that's a credit myth that we can just kind of pay a little something every month to a creditor and there's no negative repercussions that can stem from that. Number 4 is if you owed $2,500 on a credit card that had 17% annual percentage rate and paid only the 2% minimum due, of which your first payment would be $50. Of course, as your balance would go down, that dollar amount minimum payment would go down from $50 as well. How long would it take you to pay that card off if you never used it again? 30 years, 9 years, 5 years, or 3 years? Believe it or not, if you owed that $2,500 at 17% interest and you paid the minimum, it would take 30 years to pay that back if you never used that card to buy something ever again. So paying the minimum is typically an approach that is best avoided because it can really cost you a lot of money in the long run. In fact, number 5, how much interest would you pay on the above example? The answer is actually over $5,200 D. So it can be very expensive. The credit card companies don't mind you paying the minimum because they do fairly well off of that, but it's not really the best way for us to go. Having good credit is important. Why? Well, it can affect your employment, as we've already touched on. Housing, where you live, whether you're buying, of course, applying for a home loan, or even if you're renting, landlords may factor in credit as part of that application process. Interest rates, of course, can vary wildly, depending upon how good your credit is. You might still get approved for a credit card or for a loan, even with poor credit, but the interest rate might be just horribly high and cost you a lot more money. Down payments, the down payment that you pay for something, such as a car, might be a whole lot less if you have good credit. Utility deposits, that can vary. Instead of having to pay a large utility deposit when you move into a place, perhaps you might only pay a small one or none at all. So they factor in credit in that as well. And then insurance. Believe it or not, Consumer Reports reported that bad credit can impact your car insurance rates even more so than if you had a DWI, driving while intoxicated. That doesn't seem to make much sense, but that's what Consumer Reports said they found in their extensive insurance rate quotes that they went and did. So our insurance can be impacted by our credit. Now, how can you build credit? Sometimes people say, well, I don't have credit, and they're not giving me credit because they say I don't have credit. Well, there are some ways around that. Retail cards, department store cards are typically easier to get. Now, there's some exceptions, but on the whole, retail companies are typically more lenient in extending credit than MasterCard or Visa, a major credit card. Your bank's credit card, if you have a checking account, savings account with your bank and have good stability there, you could apply at your bank and you may be more likely to get a credit card that way. Or you might need to get a secured card. A secured card, you may have to put down an amount like $200, $300, something like that to secure it. They give you a small credit line that you can utilize. And if you default on that card, you don't make your payments, then they take that deposit that you put on that. So you're securing that. And typically cards after a point in time, perhaps a year, if you've been a good customer, will convert that over to a regular credit card, unsecured card, and it'll no longer be secured. Credit unions are owned by the members. And so typically they will give you better interest rates on your savings and a lower interest rate on loans that you may get. So credit unions are a way that many people have utilized to establish credit. If someone co-signs for you, that can help you to establish credit, or if they add you on as a secondary borrower on a joint account, or as an authorized user. But you always, always, always want to read the fine print to see what you're getting into. It's not much fun to read the fine print, but it's a lot better than getting surprised with a nasty financial surprise later that was buried somewhere in the fine print. Credit cards, some key factors to keep in mind. The interest rates vary widely, so pick and choose something that isn't going to cost you a lot of money, that maybe doesn't have an annual fee. Now, the thing about interest rates, a credit card's interest rate doesn't really matter. If, and this is a big if you pay that card off in full during that grace period, then it doesn't really matter if the interest rate is 17%, 14%, or 27%, because you're paying that off. They're not getting to hit you with any interest. But many people, of course, do carry revolving debt from month to month, and you would want a low interest rate to help you with that. Fees and penalties vary quite a bit from card to card, so be sure to see what applies with the card that you're looking at. Paying the minimum, we already spoke about how paying the minimum can be very expensive. Shopping around for credit, rather than just take the first thing that you see, it pays to compare. Credit card credit insurance is something that credit card companies would push quite a bit, but it was a great deal for the credit card companies, but Consumer Reports says not really so much a great deal for you. For example, if you, depending upon the policy of the particular credit card insurance plan, if you lost your job for 4 months, the credit card company might pay the minimum credit card payment that you had for those 4 months, and they pay the minimum. So the benefit of what you get might not be that great. Plus, we've heard from some people who said when they went to use that insurance, there was some kind of a red tape problem, or a problem where they'd say, oh, well, we're not going to cover that, or we're only going to cover it for this long. So Consumer Report says that's not typically a great way to go. And Consumer Reports also says extended warranties are typically not a great way to go either. They make companies billions of dollars every year on extended warranties, which is why the companies push them so much, is because of the billions and billions of dollars in profits. But Consumer Reports did say something like an extended warranty plan with a computer package, where they offered free technical support as part of that, could be actually a very good deal in those cases. And I know I've taken advantage of those myself, and was glad that I did. Now, no payments, no interest for 6-month offers, or for 9 months or 12 months, 18 months, whatever it might be. There's variations on that. Is that good? Is that bad? What do you think? Coming up on the holiday season, we're going to be seeing this kind of offer here very frequently here, pretty quickly. And the answer is, it could be good or bad. Here's how it works. If a company says you can buy this furniture if you charge at least $1,000 in furniture, we'll give you the option to make no payments and pay no interest for, let's say, 6 months. You say, great, sounds good to me. And you get that, and you get that furniture, and you don't make any payments on it for those 6 months because you didn't have to. At the end of the 6 months, you might be surprised to see that in that fine print, and we spoke about looking at the fine print, in that fine print, it says that whatever balance that you may owe at the end of that time period, 6 months, 9 months, 12 months, whatever it might be, the company will go back to the original purchase date and hit you with retroactive interest for every single one of those months. So basically, in a nutshell, it can be a good deal if you can afford that item, and if you pay it off within those 6 months, 9 months, 12 months, and get that interest-free rate. If you don't get that paid off and the interest rate is pretty high and they smack you with that retroactive interest every month along the way, and it's not such a great deal. So keep that in mind when you see those offers. Some additional tips. Co-signing can be a painful experience. We warn people. We'll hear people say sometimes, why I co-signed for my buddy Tim so he could get a vehicle. And then he didn't make his payments and they came after me. Very sorry to hear that, but that's unfortunately that's how co-signing works. That's what co-signing is. Co-signing is not merely saying, hey, Tim's a swell guy, give him a car loan. You're saying, hey, if Tim does not make those payments, you can come after me and I will. And it shows up on your credit report as well as that person's, that payments were missed and so forth. So we've heard lots of horror stories about co-signing. You really have to think long and hard before doing something like that. It goes south many times. Regularly discuss your finances with your spouse. It's typical for one spouse or partner in a relationship to just be really good at finances, and you know, they're happy to do it and they excel at it. You know, okay, great. But the other person needs to be in the loop of what's going on. How much do we owe? Who do we owe? Yeah, how can I access those accounts? Or, you know, if you get sick and go in the hospital, how do I pay the bills that month or for those couple weeks? All too often we've seen one partner perfectly comfortable with letting the other person just take the ball and run with it, but then something happens and now they're out and in the dark. Plus, we're going to be doing better anyway financially when we're on the same page. If we have some shared goals and we know what we're aiming for and planning for and working towards. So it's just a good practice to communicate about finances. Don't overdo the low monthly payments. Marketing psychology. You know, retailers learned a long time ago, hey, we can sell more refrigerators, widgets, and doodads if instead of saying it's $1,000, if we say it's only $35.99 a month. So a lot of people will buy something. If they look at the whole price, they might say, no, that's too rich for my blood, or not right now, maybe later. But if they see, oh, $35.99, yeah, I can do that. And we see folks who will drown in low monthly payments at $35.99 here, $25.95 there. And all that can add up if we're not careful. So be careful not to overdo the low monthly payments. And this ties into, I'll jump down to avoid a high debt load, even if you can afford it today. Things might be going well today, but unfortunately, emergencies are a fact of life. Life can throw us some curveballs, and you might feel comfortable juggling a moderate amount of debt. I've got a bit of debt, but I can handle it. I'm okay. Yeah, I've got a bunch of low monthly payments, but I'm all right. But what about 3 months from now, 6 months from now? If something could happen and your work downsizes your job, or they reduce your hours or say no more overtime, and so many people count on that overtime to make ends meet. So we don't want to carry a good bit of a debt load today simply because we can afford it, because we don't know what tomorrow may bring. So it's kind of wise to be a bit cautious with that. Don't ever give out, this is a safety tip, don't ever give out your credit card number over the phone unless you place the call and you know who you're dealing with. Oftentimes scammers will call and they'll say they're with your bank. with your credit card company. And they may try to play on our emotions and scare us to death and say, your account has been frozen. And unless you verify this information with us, we're going to close out your account. Oh my goodness, don't do that. Here's my account info. Here's my social security number. Da, 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 da. So don't fall victim to that. The best thing to do, you can say, oh, thanks for letting me know, click, hang up. Then go get your credit card out. Look on that back of that credit card. Look at that 800 toll-free number or the phone number for your bank, or swing by your local bank and say, hey, was this you guys? Did you guys really contact me? No? Okay, well, I'm glad I didn't provide any info then. So that's how we can retain control over that potentially dangerous situation, is you make sure you contact the legitimate company directly on your own, not reply to a phone call that potential con artists could reach out to you for. A strategy on spending to help us not go nuts is to ask ourselves, how many hours will I have to work for that if I charge that item? I'm all excited about it today, but how much of my life do I have to trade to buy that 80-inch Ultra 4K TV? And you might decide, oh, that's too much. I'm going to wait. I'm good with what I've got for now, or I'll wait till there's a sale, next year or whatever. So those are some tips to keep in mind. Having trouble making ends meet. If you're living paycheck to paycheck, things are starting to get to be a struggle. Your debt load is rising. You might want to consider plastic surgery, and that's cutting up the credit card. Put the credit card up, cut it up, whatever. That's hard to put out a fire if you're adding more gas to it. So if you've got a problem with spending and accruing debt, but yet you're still using your cards, that's going to probably work against you. So putting up those cards or cutting it up can be a helpful way to go. Now, there are 3 main credit reporting bureaus you may have heard of: Experian, TransUnion, and Equifax. What do these reports have? Well, how much you owe, whether you pay on time, where you work, how long you work there. There are different places that'll say, get your report here. A lot of places are not free. They may inundate you with a bunch of marketing, advertising. But the one federally mandated site to go to that President Bush signed into law way back when, annualcreditreport.com. That's the one the government said people can go here and get their credit report for free for each one of the 3 main credit bureaus. Every year you can get that for free. And right now at this time, it's actually more frequently than that during the pandemic. And you're able to get it more frequently done than that if you wish. So annualcreditreport.com is where you would go. There's also the phone number there that you can call if you don't have access to do that online. Disputing errors and fraud in your credit report. It's important to get a copy of your credit report so you can see what's on there. You might say, wait a minute, I've never had an Old Navy credit card. Well, that could be an error, or it could be fraud. So you're going to want to deal with that and take some action. So knowing it's there is good, especially if you might go buy a car or certainly a home in the next 6 months. Get a copy of your credit report, see what's on there. If there's anything that shouldn't be on there, anything is incorrect or any fraud, you'll have some time to deal with it, rather than you're pulling it right now as you're wanting to buy that item, and that can be an issue. What is a credit score? Well, it's a way for lenders to see, is this person a good credit risk? Think about it. If you were a lender and someone was wanting credit from you, how would you know if they were likely to pay back their debt or not? And your job is on the line if you have too many folks who don't pay their money back. So how do they do that? Well, FICO is actually the most common credit scoring company used by lenders today. There's some different ones, but FICO is the main one that's used. And with FICO's scoring model, scores range from 300 to 850. And FICO actually has various FICO models. It's not just a FICO score. There's one model, that's it. FICO has multiple models that they offer to lenders. But the scores range typically from 300 to 850. Obviously, the higher the better. And but let's take a look at the next page. Your score, this is something we hear. One person got upset one time. He said, I got my free credit report. My score wasn't in there. They wanted money for that. He was pretty upset about that. He thought it was some kind of a scam or something. And I said, well, you know, the government did say you can access your credit report now and for free. So that's great. But the law did not say you also can get your credit score for free as well. So that's like an extra add-on feature. If you choose to get that, it's optional, and there's a small fee for that. I did it. I liked it because it says, here's your score. Here's how you compare to the national average. Here are some things you can do to improve your score. I thought it was worth the small fee. And you can get your credit score when you get your credit report, or you can go to myfico.com and access it that way. It's important to know there are 5 main credit scoring factors. There's all kinds of factors, and they won't even tell us what they all are. They tell us more than they ever used to, but they say it's like Coca-Cola's secret formula. We're not telling you everything. So, but we do know enough. And these are the 5 main factors. And if you only remember one thing, remember this: how much you owe and how timely you pay is 65% of your credit score. That's huge. So what you can do is focus on knocking down your debt and making sure you're paying on time each month. That goes a long way towards a healthy credit score. 35% is your payment history, how you paid in the past. 30% goes to how much you owe. And 15% is how long you've had credit. If you've had credit for 10 years or 15 years, they like that a lot more than just 5 years. And sometimes people are surprised that they don't even have a credit file. They'll say, well, I got a credit card 2 months ago. Why don't I have a credit score and all that? Well, it can take 6 months or more before that kicks in. So if you're new to the world of credit, that's normal. That's what's going on. 10% of your credit score is if you have new credit, and types of credit. FICO likes that you have a car loan, a home loan, a student loan, a credit card kind of a thing, more than they like, I've got 3 credit cards, but that's it. So they'd like a variety. Now, they don't tell us exactly what, but at least we know that's their approach. They like a variety of some different kinds of things. And for a final thought, this is good to keep in mind. Credit cards can make you think like you have money, and it's easy to fall back on them as an emergency fund. But the reality is, it's not money. I remember when I had a credit card for the first time with like a $2,000 credit limit on it. And I said to myself, well, I got $2,000 I can spend. No, it's not the same as having $2,000 cash, because this is money that's debt. It's like a loan that I got to repay, kind of a thing. So remember to be conservative with credit cards. If you have one, that's fine. Our approach is not that they are bad. It's a tool, and any tool can be used wisely or misused. So you may want to set a limit of 1 credit card or 2 credit cards, and certainly aim to pay more than the minimum each month if you charge something on there. Ideally, whatever you charge this month, pay in full next month, but many Americans don't do that, in which case pay more than the minimum to knock that out sooner. Focus on building up a savings emergency fund as opposed to focusing on credit cards as an emergency fund. It can be especially problematic, and we've seen this happen when the, I think it was the 2008 housing bubble burst and the Great Recession. Credit card companies were trying to limit the damage that people could potentially do in defaulting on credit card debt, so they shrunk down credit card lines. So people were surprised that perhaps they owed $1,500 on a $5,000 credit card line, and suddenly found their credit card company knocked down their credit line to $2,000. So now they had $1,500 that they owed out of $2,000. So they have very little emergency fund left if they're using that credit card as an emergency fund. So there's no substitute for building up that cash bank account emergency fund versus credit cards. Well, if you have any credit questions or concerns, if we can help you with budgeting, financial counseling, credit and debt counseling, we would be glad to help you. CCOA also offers credit report reviews, where we can pull a copy of your credit report and credit score. You can ask about one of those sessions. And we have a debt management program that can help people to pay off their debt in full and get out of debt within 3 to 5 years. Thank you so much. Have a great day.